Welcome to the Lone Ranger Radio Show. You got Bruce Woodburn, CrossCountry Mortgage. Yes, I am the Lone Ranger, and thanks for tuning in today. I got to tell you, it's going to be a rainy weekend for us, but you know what? I'm in the studio, and I'm helping people with their refinances and buying houses right now. And so the Lone Ranger's on call this weekend. If you need me, you can call me. If I don't answer, I'll call you back. 407-706-3313. or 813-213-4009 for my Tampa Bay friends. And we got a lot of stuff going on. And my gosh, I mean, you know, now we got the government shutdown we had here going on. I'm going to tell you something. We're going to talk about government shutdown and how that impacts the real estate and mortgage market. I want to talk about where interest rates are going right now, who's buying, who's refinancing, who should refinance, who shouldn't refinance. So I want to get into all that during the next hour. So we got an hour to cover here. In this first 15-minute segment, there's a few things that I want to get down to brass tacks on, and we can really figure out what direction to go in when it comes to whether you should be out looking for a house or not. First of all, let's talk about the government shutdown. Government shutdown, not really a good thing to have happen. However, if you are looking to refinance or if you were looking to buy a home, you got yourself a nugget because interest rates went down. The bonds loved it. The bond market loved it. Stock market didn't like it so much at first, and then it kind of bounced back. But now anybody who was on the fence about refinancing or on the fence about locking their rate in for a purchase, man, I was locking them in like crazy this week, like crazy. So I really felt that there's an opportunity. Now, is that an opportunity for you? I don't know. Maybe it is, maybe it isn't. I'm going to tell you one thing. Rates improved. They did. Now, did they plummet like you hear on the news? No, nothing's plummeted, and I'm hearing clients call me about rates that lenders are quoting them. I'm going to tell you something. The bad apples are back. They're back. The bad actors are back. I thought we got rid of them in 2010 when we revamped the way that the mortgage industry was and disclosures. But I'm going to tell you something right now. Some of the bad actors are the biggest guys out there. Okay. You've got to be very careful. And if you are a veteran or if you have an FHA loan, you are getting scammed right and left. Right and left. Lenders can manipulate things to make a refinance look better than it is when it comes to FHA and VA, and you guys are getting duped by it. So I'm going to tell you this right now. If you got a VA loan and your rate is north of, say, 6.75, I want you to call me now. If I have already done your mortgage once before and you want to refinance with me, I can just convert your loan over to a refinance. But if you haven't and you're a veteran or you have an FHA loan and you're north of 6.75, it might be right. More so for a veteran than an even FHA. FHA, anybody that had a rate in the sevens, I locked them in this week. I locked them in. They were like crazy because they dipped. Now, listen, I don't think your bank, I don't think your credit union, I don't think Rocket Mortgage, I don't think Bank of America, I don't think Wells Fargo, I don't think any of those loan officers are watching the market like I do. And I can assure you that none of them have been telling you, don't refi yet. Don't refi yet. Hold off. It's going to get better. No, I'm the only idiot out there that's been telling you guys to hold off. Listen, super bad business model on my behalf, I will admit, because I'm in the business of doing mortgages. So why would I tell you not to do a mortgage? Here's why. If I don't have your 100% that you trust me, then you shouldn't use me. I'm going to tell you this much right now. And this is a solemn promise from the bottom of my heart. I will never, ever, ever mislead you to doing something you should not do. I will not convince you to do a refi. I won't convince you to do a purchase. I won't tell you you should do one loan program over another because it makes the lender more money. By the way, my loan officers on my team are not commission-based. They are all salary. They get paid whether you close or not. So they don't have an incentive to try to sell you something. They're getting paid either way. If you don't have 100% confidence in the people that you're doing business with, don't do it. I wouldn't get in front of a doctor that's going to do heart surgery on me if I didn't have 100% confidence in them. I wouldn't have a financial planner if I didn't have 100% confidence in them. But many of you do. Many of you have no clue. You call me up and you go, yeah, I got a good financial planner. They got me into this high yield fund at 5.25%. I'm like, you got the crappiest people out there working for you. I can't believe it. So many of you just don't know how to manage your money. And you know what? It's not uncommon. You're not alone. It's not a judgment call. You're not alone. A lot of people don't. I just took, I made an effort to knowing as much as I could about my finances. Now, am I a financial expert? No, not when it comes to my investments, but I'm damn good. And I'm telling you, if I'm not making 12 to 15% on a regular basis, I'm not happy. In some of my investments, I make over 20. I had one I made 20% in 4 months. Now, listen, I'm not trying to sell you anything. I'm not licensed to sell you stocks or give you stock advice. I can only tell you what I do, but I can tell you this much. I have taken a concerted effort in understanding how money works. And most Americans don't know how money works. You don't know how it works. You don't know how to leverage money. Matter of fact, you come to me and you go, yeah, I got 50 grand in my 401k and I got $30,000 in debt. And I'm like, well, take the money out of your 401k and pay off your debt. No, I really want to keep the money in there. And I'm like, why? You're making 4.5% on your 401k and you're paying 24% on the money you're borrowing. Does that make sense? No, but you know what? I just hate to spend the money. It isn't your money. That 40,000 in the 401k isn't your money. It's your credit card's money. So pay it off. Be debt free. Debt is the arch enemy of wealth. When you accumulate debt, you can't accumulate wealth. And don't think because you have debt and money in your bank that you have money. Pay the money off, then that's how much money you actually have left. So I'm just telling you, I know I get off on a tangent with you guys sometime, but it's my show. I can do whatever I want, right? But I'm here to help you. And I'm here to tell you that if you're doing it wrong, the Lone Ranger doesn't have any problem in telling you you're screwing it up. You're not doing it right. And maybe that's not what you want to hear. Maybe you want somebody softer than me. Then find somebody. You know what? That's why I have 5 people on my team, because I have other people that are very soft with my clients. They're very easy. Then when something happens, then they call me and I got to step in and address the problems. But here's the thing. I'm not soft and I'm very direct. And that might not be for everybody. It just might not. But the information and the advice that I give to my clients is to serve you, not to serve me. I can promise you, I would not tell you to hold off on refinancing if it was to serve me. I'd tell everybody, yeah, refinance right now. Now's the right time to do it. Well, it's not the right time to do it for all of you. It's only the right time for some of you. It's not even the right time for all of you to buy a home. It's the right time for most of you, but not the right time for all of you. That wouldn't make sense. Everybody has different needs. Everybody has different circumstances. And we have to understand that. We have to know when it's time to cut bait. Okay. When is it time to lock your rate in? So here's the deal. Government shutdown was good. Why? Because it creates uncertainty in the market. And when there's uncertainty in the market, then stocks usually suffer and bonds benefit from it. And that's exactly what happened with the market, is that bonds, they rallied because, and not really a rally, let's say they improved. They improved because of the uncertainty. Now, once the government's back in action again, I think rates are going to pop back up. You heard me on Monday. I did an interview with Amy Caulfield on Fox News, Fox 35, my favorite channel. And they interview me as an expert in the industry. Thank you very much. And one of the things that they got wind of is that the Wall Street Journal posted that interest rates were likely to increase by the end of the year rather than decrease, regardless of the Fed making 2 more Fed cuts. Now, what do you think about that? Is that the same thing I've been telling you all along? Is that the same information I've been telling you? Now, all of a sudden, the Wall Street Journal comes out with it. It takes the 10th grade freaking dropout here high school dropout to tell Wall Street what's going to happen with the market. Excuse me. I'm just telling you, I watch it and I can see the signals. Now, there's never a guarantee. I'm never 100% right. I don't claim to be 100% right, but I am right most of the time. If you want to work with somebody like me, then save me in your phone, call me, refer your friends, your family member, your coworkers. You need a refinance, you need a home equity line, you need a reverse mortgage, you need a purchase mortgage, you need a construction loan. I got it all right here. Everything's in-house, and I service 90% of my loans. If you want that, or you want to search the internet and get duped by some of these lenders that are going to take advantage of you and bait and switch you at the end. And I'm going to tell you something, folks, it's not all the little brokers. I'm seeing some of the big players doing it right now. Now, if you look at the big players like the Bank of America and the Wells Fargos and so forth, you look at the consumer lawsuits that happen, they're in the tens of millions of dollars for deceptive practices. These are your big guys. Now, am I saying they're doing it right now? I'm not saying anybody's doing it right now. I'm not pointing a finger at anybody. I'm just telling you, you people are easily persuaded by commercials, and it's all BS. They're commercials, folks. They're designed to get you to do business with them. None of them are going, hey, Mr. or Ms. Jones, your interest rates might drop and you shouldn't refinance. I've never seen a commercial like that at all, but you hear me say it. Why? Because it's the right thing to do. Now, here's the thing. I created a VIP watch list for my refis. You guys have all heard me. I say, get on my VIP watch list. I'll create a target rate for you. We'll refinance when the target rate hits. Now I'm switching that. I'm saying get your application made now, right now. Go to webringyouhome.com. Write that down. Webringyouhome.com. You go to my website and you complete an application for a refinance. I will start off with a soft credit pull. No hard credit pulls. Okay. So we're going to start off with a soft credit pull. We're going to get your loan all set up. I want to see your current mortgage statement. I want to see your current insurance deck page so I know exactly what you're paying. And we're going to determine what's the best rate for you to save the most amount of money. So I had a client come to me just yesterday to come in to do an application, and he gave me some forms that were from his current mortgage lender, Freedom Mortgage. Now, Freedom Mortgage was just a little bit higher in interest rate than me, but I looked at their total cost and I looked at everything all together. They had a 28-month break even period on refinancing. Now, that's not bad. If you're less than 36 months, it's a go. It's a go if you can break even in less than 36 months. Now, who should not do that? The person that's going to move in a year. Don't do that. Don't do anything. But a 28-month break even period is good. But I said, hey, Tony and Joe, I love you. You know how much your break even point is with me? How much? 1 year. 1 year and 14 days is exactly how much it was. Not 28. That was over 2 years. So who's better? The Loan Arranger's better. Call me now. 813-213-4009. That's 813-213-4009 or 407-706-3313. That's 407-706-3313 or webringyouhome.com. I'll be right back.